everybody. If you've been following any sort of financial news headlines at all, you know that Nvidia, which is now the largest company in the world, I think it still holds that title as of today, uh, has recently split its stock. And not for the first time. It just did, I think, a 10-to-1 split, but this is just the latest in a series of splits. I want to say since Nvidia went public in the 90s, and one of its original shares is now something like 480 shares today. Or it's in the 2 to 400 share range. Don't quote me on that part, but it's split several times. A lot of successful companies have in the past. So we're going to dive into what a split is, what it isn't, what you need to know about it, and some other stocks that we think might be on the split list sometime soon. Before we dive in, check out fool.com/Frankel. You can get the top 10 stocks to buy right now from the Motley Fool. They're my sponsor. They are the best way to support this work we are doing here on YouTube. Again, that is fool.com/Frankel. So, Tyler, Nvidia just split its stock 10-to-1. That means I should run out and buy it, correct? Definitely a loaded question. So
I find these, it's really hard to come up with a good answer for these, because it's one of those ones where if you squint hard enough, in our business of talking about investing, you can find an argument if you want to, but it's kind of one of those things where it's like, it's a stock split. Like, they've been going on for as long as the stock market has been going on. And, maybe if YouTube video channels like this existed 15 years ago, we would be talking about this, but with a little bit more gravity. But to me, we can get into this maybe later. It's really hard for me to get too excited about a stock split, because it's really no different than getting my paycheck at the end of the week, and instead of my boss paying me in $100 bills, he pays me in fives. It's kind of the same thing, right? It's still the same amount of money. He's just giving to me in a smaller currency.
yeah, or if you go from biweekly to weekly paychecks, like it's it's the same amount of money, just a little bit looks a little different. So a stock split, if you're not familiar, it's when a company takes its shares and essentially splits them in half. So if a company has 1 billion shares of stock and does a 2-for-1 split, it would end up with 2 billion shares, each of which represented half of the value and half of the equity in the company that it previously did. So instead of $100 a share, it would immediately drop to $50 a share, and you'd have twice as many of them in your account. It's kind of the basics of a stock split. There are some reasons companies do this. Before we get into those, just know that it doesn't affect the amount of equity you own in the stock. It splits the price in half as well as doubles the number of shares. Or in NVIDIA's case, it cuts the price into a tenth instead of just, it doesn't multiply your investment by 10, which is kind of a rookie mistake. So
best way to confirm this is go to look at your brokerage and look at the dollar value or the market value of the company that you own. And after a split, probably aside from maybe the stock moving, that the market value is going to be more or less the same before and after the split. So,
stock companies choose to split their stocks generally to keep them in a desired price range. Now, that varies from company to company. There are some reasons for this. The historical reason has been to make it more accessible for investors to buy. Before things like fractional shares existed, it was tough for newer investors to buy stocks that were trading for $1,000 or $2,000 a share. You have to save up $2,000 to be able to buy one share of the stock. That's not really the case today. But on the other hand, not all brokers offer fractional shares yet. That's still kind of an emerging trend, especially if you have one of the older brokers. I believe E-Trade is one that doesn't offer fractional shares yet. So if you have a broker like that, then it does make it more accessible to you. It can help with inclusion in stock indices. In NVIDIA's case, specifically, you might wonder why they're the largest company in the world and they're not included in the Dow Jones Industrial Average yet, which is an index of 30 of the largest companies in the world. The reason is their stock price was too high. It's a price-weighted index, not a market cap-weighted index like the S&P 500, meaning that the stock price determines the company's weight in the index. So the people who make the Dow Jones indices like their prices to be in a relatively narrow range. So no one company makes up half of the index just because it has a high share price. So it can help with inclusion in indices. It can make it more accessible, and you can get an initial pop when a stock announces a split, right? Tyler, I'm sure you'd agree with this statement. Generally, a stock split happens when a company's doing well. So it could be like a
Well,
confirmation.
I certainly can't think of a company doing well that does a reverse stock split, which is when they take
Well, that's
two of
fair.
their
There are
shares and
reverse stock
combine them into
splits.
one.
So, assuming it's a forward stock split, it generally means that the company's doing well and thinks that the current share price is going to hold up. If a stock rises over a period of, say, 5 years from $100 to $1,000, management doing a stock split is essentially telling the market, we don't think this is going to be a $100 stock again anytime soon. We think we've done well. We think this stock price is here to stay, within a range, and we need it to be a little lower, so we're going to split the stock. It generally happens when it does well, and it means the management team is kind of confirming that the company's done well. So you can get a little pop because of that. You get a little pop as it becomes more accessible. People who don't have $2,000 can now buy a share of Nvidia. So it doesn't affect the value, but it can cause a near-term pop. But generally, we shouldn't trade around splits, right?
I mean, I barely trade anyways. I barely buy companies. Maybe every 6 months I might buy a few. But I want to go to a little tangent here because you mentioned it. Like there are still a few brokerages that don't offer fractionalized or dollar amount of like purchases. If you're in those companies, just get out of them. Come on. Like it's 2024. How are these companies not offering this as a service to their investors, whatever you want to call account holders? Like there's a multitude of services out there today that are offering free commissions or no commissions at all, fractionalized, buy them at a dollar amount. All of these things I think I've been with Fidelity for a really long time. It's been like 4 years now that I've been able to do this. Like how is a brokerage company not being able to do fractionalized? That's like part of me says like if anybody is still part of with these companies, like this is part of the reason why they still have to do stock splits, because I can't just go, instead of like saying, oh, I want to buy 3 shares because I have to buy 3, because I can't just say I want X dollars amount of a stock. So rant over. That I just had to get it out of my chest.
Well, no, you're not wrong, and I mean, a lot of people are new Schwab customers, just to name one example, because they bought TD Ameritrade. They just migrated all the accounts over. Schwab will let you do fractional trading, but only for stocks in the S&P 500. Any other, which pretty much eliminates Tyler's portfolio.
Sure, it's a more liquid market, so sure, but
but I mean, for a company that big with trillions of dollars of assets under management, it shouldn't be that hard to build out the technology to do. You're absolutely right that that's one of the few reasons that companies still split stocks. There are very few companies that realistically could be added to the Dow that's really an issue. With Nvidia, it could have been a motivating factor, but that's few and far between. So real quick before we go, there are a bunch of stocks in the market that have share prices above $1,000. Not all of them are going to split because some of them, as you very nicely put it before we recorded, just don't care about what their stock price is. Berkshire Hathaway's A shares are one of them. What are some stocks that you think are not going to split that a lot of people think might?
Well, I don't know which ones people think might, because if they do, I'm not paying much attention to them.
Anything
but
over $1,000, they
basically
think might
anything
split.
over $1,000. Here's a great example of one that I don't think will ever split its stock. AutoZone stock is $2,900 a share. They're not going to do it because you know what? They actually just buy back a lot of their own stock. So it's like, hey, if we keep people out of the market, we're just going to keep buying our stock. Whatever. We'll create value for our existing shareholders. If you look at $2,900 shares price and be like, oh, that's too expensive, we don't want you to be our investor anyways. So there's a great example. NVR, home builder. I think there's it's over 3,000 at least, right? They're not stock. I don't even know if that management team exists. I think it's run by a computer.
Yeah, have you ever read one of their press releases?
Have you ever
Some
seen a picture on the
Chat
internet of
GPT.
anyone?
Chat GPT could have easily
Anyone.
made their quarterly earnings report.
If you can
It's
find a picture of any of their management team on the internet, I will give you $500. No internet present whatsoever.
No, I don't foresee them ever splitting their stock. Two others that I don't really see doing it are Mercado Libre, even though I kind of wish they would. That's Meli, Meli. Another one, they really don't seem to care what their stock price is. They're trying to compound and grow. And Markel, I don't foresee Markel ever splitting their stock. They would have done it years ago if that was a concern for them. They're not like an Nvidia that just shot up through the roof from $200 a share to $1,500 a share within a couple of years. They were a slow and steady compounder. I really don't see them. They're obviously modeled after Berkshire Hathaway. And the whole reason, I don't know if you know the reason for the creation of Berkshire's B shares. It's because Warren Buffett didn't want these big investment clubs buying an A share and selling it off piece by piece to other investors who wanted to invest and charging fees in the process, because we know how anti-fee Buffett is. Fractional shares eliminate that concern. So, if you want to buy a half a share of Markel or NVR or Mercado Libre, you can. They don't need to split the stock for any of those reasons. So those are stocks I don't foresee splitting anytime soon.
I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment, so I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 4 times, so go to fool.com/Frankel to get your 10 stock picks now. The Motley Fool Stock Advisor returns are 650% as of April 16th, 2024, and are measured against the S&P 500 returns of 148% as of April 16th, 2024.